So we're back. Good afternoon. Good morning. And I posted recently about adding real estate into a well-diversified investment portfolio, and check that post out, how you can increase your yields. I should say how some people can increase their yields when it's appropriate. And the question then is, how do you choose the best REIT for you? And so today we're here talking with Danny Carmona from ExchangeRight, which is a DST, second or third largest DST provider.
Yeah, depending on the year.
Okay.
That's fair to say.
They fly under the radar. Not so many people have heard of ExchangeRight. You know, you may have heard bigger names like Inland America, Cantor Fitzgerald, but ExchangeRight is a big player. They're right up there with the big boys, and they like to do things a little differently. So how do you feel that ExchangeRight is different from your competitors?
Good question. Thanks, Dan. So I think ExchangeRight is very unique in this industry. ExchangeRight was born out of a CPA and financial planning practice. So the first couple of decades of the partners of ExchangeRight, they were CPAs and advising their clients on sound financial investments. And going through the early 2000s, the partners of ExchangeRight really did due diligence on every single available investment opportunity out there, whether it was a 1031 exchange or it was a REIT. And with all of that data and what happened in 08 and 09, they really saw what worked in challenging times and they saw what didn't work. And so they wanted to create better offerings for their own investors. They said, if we can't find sponsors that are going to create fee-sensitive, durable income streams for our clients, we're going to have to do it ourselves. And so that's where ExchangeRight came from, was a desire to solve a problem that their investors had. And since then, we've become one of the largest sponsors in the industry. We've got about 6.3 billion of assets under management, about 100 different offerings we've brought to market on both the 1031 exchange and REIT investments, and every single one of them has met or exceeded what it's supposed to do.
That's amazing. So in my experience with DSTs, most of the DSTs that I've encountered and big name firms, reputable, you know, you would not ordinarily question the structure, but most of them that I've encountered are built from, the way I describe it is from the top down. So they're built by some investment banking firm or equivalent, and it's optimized for the sponsor company to generate their fees no matter what happens with the underlying assets. So, you know, in a trough, the sponsor company is still getting their management fee no matter what the vacancies are in the underlying portfolio of properties. And so what I like about ExchangeRight is that they've turned that model, they've flipped it upside down. And the structure is built from the bottom up, where ExchangeRight as a sponsor company is actually paid only if the investors are paid a defined return, and ExchangeRight is also contributing to every transaction with their own money. Can you talk a little bit more about how that evolved?
Yeah, definitely. So again, from the origination story of ExchangeRight, advisors wanted to create better products for their own clients. We have that mentality today in everything that we do, whether it's our DST or our REIT. But specifically for our REIT, we do not participate in anything until investors get back 100% of their capital and a 7% preferred return.
And that's written in the PPM.
That's written into the PPM. And as you mentioned before, we're not taking a fee on an annual basis regardless of performance. Most companies do that. And how are you going to have a greater chance of protecting investor capital and returning appreciation and just returning excess capital to investors by not removing all those fees every single year? And so ExchangeRight has flipped the structure of how these are being done and giving the best probability that investors are able to preserve their capital and achieve all of the goals that we're setting out to do.